the government policy priorities, of course, are based in the Big Four agenda and are embedded in the 2021 budget. Drivers and enablers of the four priorities are expected to fund sufficiently activities related to the Big Four agenda. Our Big Four agenda, I don't think I need to mention, everybody knows it's affordable housing, universal health care, manufacturing and food security. I will not go to the highlights of our budget. That is for another day. So as we do this, we have risks in the microeconomic outlook. Without risk from both the microeconomic outlook is not, of course, without risk, both external and domestic. So the recent tension between US and Iran are likely to affect oil prices. These will affect domestic prices and the cost of imports. The weak global business confidence due to trade tariffs, tensions between the US has continued to drag growth and emerging and developing economies. In conclusion, we also doing the PPP laws. It's in Parliament, we are reviewing, because I think if we partner with the public-private sector, then I think we'll release government from doing very many things that government should not be doing. So we encourage the private sector here to come up and uptake the projects that we have. Though we've seen so many requests, we are formulating a matrix because at times we get in so much demand. But of course, if we don't have a matrix to how to deal with the PPP, it takes a lot of time. Currently, we have over 80 requests, but when we look at the matrix, only 14 qualify. And even to go through, I think we've not even closed one. No, we've closed one. We're doing the Ngong-Kiserian road that is under PPP. We closed the other one, although it has not started. That is Limuru-Mau Summit Road, and we have many others in the pipeline, but with the technical assistance we're receiving from World Bank, we hope to have more projects this financial year.
If you have GDP growing at 5%, it tells you something about the growth accounting. Let's forget about the fact that most of it was debt-driven, in the sense that, look, government invested in huge infrastructure. I think the choices that were made about where to push that money has left us to think that actually the opportunity cost of an infrastructure-driven approach to debt, which is capital intensive, as opposed to the fact that we have huge pools of labor, relatively huge pools of labor, is why some of that money and some of that new value did not end up in the pockets, and for that reason, that's why qua ground things are different. So it's telling us something about the choice of the development that we did.
Kenya has had a very solid growth in the past, averaging 5.7 like for the last 5 years, which is well above what is, for example, reported for the average growth for the sub-Saharan African region. It's also, we've seen it translate to an increase in per capita income. Poverty levels have reduced from by about 10 percentage points, from about 46% to about 36% for the data that we have currently. So that's kind of answers to the question whether this growth is actually translating to improvement of livelihoods. We also have seen the macroeconomic conditions have been broadly quite stable. And this is something that we shouldn't take for granted. Yeah. I'll give you an example. So we know that Ethiopia is growing at a very fast rate, so about 9.5% say last year. But we know that inflation is about 20. So in real terms, actually, that economy is not growing in real terms because it's growing by minus 10. Mm-hmm. So when we have inflation stable at about 5%, and we have a growth of about 5.8 or 5.6, as we may put it, it means the Kenyan economy is actually growing in real terms. So when you look at these numbers and we put them into context, we realize that actually we are fortunate here in Kenya to have an economy that it's properly run and there's macroeconomic stability.
So when we look at GDP, it's good growth, the contribution of manufacturing, I think we need to be realistic. Kenya has been pretty stagnant. It has not reached more than 20-30%. We are relying too heavily on agriculture. We have droughts, we have heavy rains that puts us at risk. So how do we encourage manufacturing? All right. So when I look at my business, I'm into pharmaceuticals. Yeah. NCBA wants me to borrow money. Good for their business, not good for my business. And the reason I'm saying is that I see debt being used in a right way, right? But when I look at my business, how am I going to increase my capacities, jobs, when the imports coming from India and Pakistan, Bangladesh are without any duties? Whereas me, I have to pay a lot of other stuffs. So there's unlevel playing fields here.
Depending on who you are, you can have a strong currency, a strong exchange rate, and it helps you. If you are US, it helps you because you purchase more abroad, and with a strong currency, you don't import inflation. You pay your debts much more cheaply. But it can also hurt you if, for example, you are a dominantly an exporting country. If you want to grow exports and you keep a strong currency, you are shooting yourself in the foot because your goods will be too expensive abroad. What you need is just the opposite. You need a devalued currency in order to sell your exports and compete with the rest of the world. So it's a dicey area. It depends on the analysis. That's why I insist you always need very top skills to analyze any situation. In our case, I would say at the moment the context is it's interesting. Our GDP is accounted for to the tune of 84% by consumption. Our investment is very low. You're talking about only about 14% accounted for the rest, by the rest of the items in GDP. So a lot of that consumption currently is imported. Dr. Njoroge in Central Bank is very proud to have a strong Kenya shilling. It buys more. And you'll be able to pay your debts a bit more easily. But it does not depend on his efforts. It does not depend on your efforts. We are not exporting. What is happening is that shilling strength is being supported by outside Kenyans, the diaspora. The diaspora is bringing into Kenya something like 210 billion per year. That is stored in the central bank. It passes through the central bank. It strengthens the shilling. Another aspect which is also tricky that needs analysis. We incurred very substantial debt. We are at a tipping point, as I said a bit earlier. Our debt is really very dicey at the moment. Public debt has escalated, and a lot of the borrowing on the external account, which you mentioned, a lot of the borrowing is to have reserves available to repay debt. And for the time that you are waiting to repay debt, those reserves are in the reserves of the Central Bank of Kenya. I know because I was a chairman there, and we spent many many years trying to figure out how best to manage reserves. So the borrowed reserves and Kenyan diaspora money keep the shilling strong. And Njoroge can take advantage of it by paying debts a bit more cheaply with a strong shilling. But it really depends, Owino. It depends on who you are, where you are, whether people are buying your securities, your bonds, etc., whether people are willing to contract debt with you. So the exchange rate, I wouldn't really, in a crowd like this, worry too much about going into details.